So let's review the SSC, the supported spring crossing pattern first. And so if you look at our handy dandy slide here, we'll remember that the main thing about the supported spring crossing is that it's a long only mean reversion pattern. And it starts out with that harsh winter, some kind of unambiguous move down. And we have two ways that we define that. We have the harsh winter in the MACD, where the MACD line crosses below its own Bollinger Band. That's one way to define the harsh winter. And then the other way we can use is that GC3 setup, which is three R10s down from where this last PSAR flip takes place. So here's that RL10 flip. And then when we get three R10s down using that RL10, then that's another way to stalk for that. After that, we're going to have some kind of reversal. At some point, it's going to stop selling off. And like you can see on this bar here, that is enough to then create this nice turn in the RL10 that's clear. And then eventually the winter is going to turn to spring somewhere in this region. And as the RL10 crosses the dragon, that's to me kind of like the alert. When the RL10 crosses the dragon, it's getting close then, because it's almost like a double crossover, like those moving average systems where you get that. And then the crossover we're waiting for is when the RL10 crosses the PSAR. Since it's tuned to the PSAR, that's going to flip it, right? The PSAR is based on the RL10. So once that RL10 crosses the PSAR, it's going to flip down here to have this PSAR on the bottom of the dragon. And then we can enter after the PSAR flip prints is normally how we start out doing it. We wait for that print. I like to use that universal entry where it just goes a little bit above that bar where it prints is kind of nice. And then the stop is always at that swing low of the RL10. This red line, that's going to be our initial stop. So that's the main concept for the SSC. We can use to begin with those outer boundary exits to just get started are pretty good, where we can, when the RL10 flips the PSAR, kind of just like where our entry was, it's kind of an equal exit. Or once the RL10 flips the PSAR, we can exit there. Or we can use where price bars hit the PSAR. Both of those are pretty good starting points. Any questions on the, I guess, the rule set or the concept of the SSC?
For the GC3 setup, is it three range stats down?
It's three R10s. So a range stat is going to be from, we take the average range of the last 30 days, and then we get the standard deviation of that. And what that ends up being is a large number compared to the range, where it's like that's our maximum reasonable intraday move, because it's
Yes.
the average range plus one. And then if we divide that into 10 little segments, this probably isn't going to be 10 because I'm not that good. But the idea is then if you divide it into 10, you get what's called the R10. It's just a range stat divided by 10.
Okay.
And so the move down for the GC3 setup is three R10s.
Thank you.
Yeah.
If I know where,
If you were trading the R6, would you do three R6s down?
You could. I mean, I just use the R10. If you
Okay.
say you're trading the R6, you mean you're using that for your risk box.
Yes.
The R6 is going to be obviously, it's going to be a little bit more of a tighter filter, right? Because it's bigger. I mean, they're both kind of nominal values. I just based it on kind of what I was seeing and then and reverse engineered it like to like what felt right. So yeah, you could use the R6. It'll be a little bit, you're going to get a stronger sell off for sure, which is always good. So yeah.
Thank you.
if I know we're just starting out and we'll finesse these things in the future, but some of my initial experiences were it's a long way before winter turns to spring. The horse is out of the gate,
Yeah.
usually before that. So I was tending to search for that third PSAR on the down slope as an earlier entry.
Mhm. Yeah, I think exactly. It's like typically as soon as you start, it seems like as soon as we start trading them, we have a feel for which one we like. I think the waiting for the PSAR to flip and print, and then like I do that universal entry is certainly like you're waiting for more confirmation, right? And like you said, yeah, the horse sometimes is out of the gate. You get these buy orders and then it's like rockets up. Other times you enter, you'll enter on the third PSAR and it hasn't actually cleared the traffic and then it fails. And so it's a trade-off. It's kind of, that's why we kind of give both. It's more of a personal feel for those, which one, you like. The waiting for the PSAR flip is particularly good if we're prone to over trading. Like that was why I did it, because that's my tendency, is to jump in too quickly. But it's more kind of like, do you want to be more aggressive or conservative? You probably will get in earlier. Obviously, with the third PSAR, you just might have some more whipsaws. So, but whatever one feels right, the idea is that then to stick with it for 20 to 30 trades for a full sample set. That's really the only way to know, is if we stick to it. In my experience, I've tried both ways and it ends up averaging out. Like a lot of stuff, like any kind of small changes, which is good. It shows the robustness of it. It's good that when a small change has a huge difference, you're always like, whoa, how fragile is this thing? So it's typically, to me, that's why it's kind of just a matter of taste. Yeah.
Yeah, I might be confusing things, but what I was uh, talking about was waiting for yellow to turn to green.
Oh, right. Yeah. No,
There's a long way.
I got focused on the third piece, our flip thing. Yeah, it's part of the rule set that Ken first wrote, is that the winter turns to spring. It's honestly, for me, like I'm more like, if it's a harsh move down and then the PSAR flips, that's like my main way to see it. Because the thing about this, I mean, that's why I use the GC3 more than the MACD. To me, the MACD is a great indicator, but it's based on moving averages. So by nature, moving averages lag, right? That's kind of like the disadvantage of moving averages, is that they lag. And it's like sometimes it'll flip and then it'll flip back, and it's like red and yellow, like a little candy cane or something. And that to me is kind of confusing. Or it'll flip and I don't know if it's turning to spring here or turning to spring here or here. So that's why I just use that. I more teach it like based on the PSAR flip than the winter turning to spring. To me, that's more just to indicate if you want to use the harsh winter, especially for like other time frames where the GC3 setup isn't applicable, to use that more as an oversold indicator for what it's worth, if that makes sense. Like I don't pay as much attention to exactly I mean, it's got to. If it's turning from negative, if the slope turns from negative to positive below the zero line, it's going to turn yellow somewhere in there. So I don't sweat that part too much.
So I have a question on the entry also. So I looked at quite a few trades, just going back through the historical charts. I wasn't simulating. I was just looking at the bars in hindsight. And so I definitely see the value of your universal entry with going into the buy stop. It will save you some losses.
Yeah.
So one thing I saw though on a couple of trades was where you have this breakout, as you showed in this example, where the price crosses the dragon a few dots back before the flip, and then that was the blue bar you drew a few minutes ago. But then the PSAR flip happens when the price is below that level, and it never regained it. It never broke that high. So do you look at that as an indicator? Do you need the price to be above that that previous breakout, or do you not worry about that?
Aren't you talking about that universal entry, or are you talking about something else?
I'm talking about the universal entry, but so in your example here, your entry is right about the same price level as that bar that broke out, I guess, when on the fourth dot before the flip.
Before the flip. So like here?
Right. So do you look at that at all as do you need to be break
because
that
of this,
high?
you mean this price bar?
Right.
Oh, you could. That's a good question. Yeah, as part of the core rule set, no, it's more just based on the PSAR flip. But one thing, as we go on, like, and people want to kind of like, we want to like, how did Bill say, finesse it? There's a version that Ken kind of exercises. You'll see where he he's more kind of just based on like how far the price moves. Like I mean, he's an amazing trader. So like he does that exceptionally well and makes it look easy. But my point is I have a version of this where it's like when you start to kind of get into it, you're like, I don't necessarily want to wait for the PSAR to flip. And I kind of have like 4 rules that I go by if we're going to do that, where we're not using the PSAR flip, if we want to front run it. And to me, then I would wait. I would say, like, to me, that's a resistance level, and I'd want it to break out of that.
Okay.
But it's not part of the core rule set, necessarily. Yeah. But I mean, I do see that as like traffic that I'd want it to get out of, like that sideways congestion. But we typically just use the PSAR flip print and then the universal entry to start out. And
Okay.
just
So you just want to break that bar that where you got the first print.
Yeah, right. Yeah, it works. It works pretty well. But of course, if you wanted to, you could say, I'm going to wait for it to break like whatever resistance I see. And same idea with that, like with the alternative entry of the third PSAR, you just want to try it out then for like 20 trades rather than like 1 or 2 and then flip back and forth, because then we don't know if it's to compare apples to apples.
Okay.
Yeah, that's a good question. Anybody, any other questions? So let's take a detour now, and before we show that, I want to do, we've done this before in the past. We started doing it and it seemed to be helpful. I'll just walk through like a bar by bar demonstration, some nice setups that I think can kind of just illustrate it better as well. We understand it. So I'm going to go over to the infamous Thinkorswim. So here we are, and this is, so there is on Thinkorswim, there's like what do you call it? Like a simulator feature called On Demand. That's kind of cool in the fact that I really like it because you can call up like an old date and then use it. And so like this is from September 16th. And then you can put it in anything. I don't as much use the real-time playback feature. I just rock it back to like the right edge of the chart, and then you can advance it like bar by bar. But it is helpful. I think it's kind of a cool feature. So that's what I'll use for this. And I was going to do the other one first, but it doesn't matter. I'll do 2 examples. So this one is in DIA, right? One of the Kata challenge patterns. And it's a 3-minute chart. And so typically I think it's nice if we just call out our questions, but for the bar by bar demonstrations, if we could just save the questions until I just finish the trade. Otherwise I get confused. So anyway, so we'll look at an SSC pattern. And so here on the right edge of the chart is the start of the session. You can see with the blue vertical line, right? We have our little scale here of the R10 marked out. That's that range stat divided by 10 is about 65 cents. So we're stalking for SSCs. So the first thing we're going to need is that harsh winter, right? Some kind of unambiguous move down. This one starts out actually with a gap up, right? So gaps up, some big bars. You can kind of see why in those first few minutes, the indicators get a little confused. At the gap up, the Bollinger Band is huge, and there's a PSAR stuck in the middle of it. That's kind of weird. But after about 10 bars or so, they start to straighten out. And so right now it's going up. The PSAR is long biased. There's really no SSC to stalk for yet. It's not really until here that, it starts becoming interesting for an SSC, because now we've had the price rolled over, RL10 rolled over and crossed the PSAR. So now this is kind of the point where then I would, for a GC3 setup, start to hang an R10 off this level as that RL10 swing high to be stalking for that setup. So price starts to move down. So I'm going to start adding some. So this is about what the GC3 setup is, right? But if it gets below here, the RL10, then I'm looking to stalk that setup. And it fails just about right to there. So that works. That works. I mean, of course, then it's also on the MACD as well. You see the MACD line is crossed. Below the Red River, that's typically the case that if you get a GC3 setup, you're going to get the indicator of the harsh winter on the MACD as well. So we had this harsh move down, and then this kind of What kind of candle would that be called? Anyway, it's a candle with a long tail. It goes up. We get a lot of up bars here, and the RL10 is starting to curl up. So that's kind of now we're stalking, right, for the GC for the SSC. Price bars are starting to cross the dragon. The RL10 has crossed the dragon, and it's kind of making a nice little consolidation here, which is nice, kind of building up the pressure. So now I'm just waiting for that PSAR flip. We'll use just the standard entry of the PSAR flip print with the universal entry, and then that standard RL10 flipping the PSAR to keep it simple. So I actually kind of like when it does this, when it starts to make some sideways congestion, the bars get smaller, because typically then it's going to be a nice tight wrist box, which I think is definitely an edge. So it's getting pretty small. See, actually starts to now fail more down to the downside. So this is why example where it's nice to wait for that PSAR flip, right? You didn't get in any of this traffic. You're just waiting for the RL10 to flip that PSAR. The strength of that indicator. So it fails more, and now it looks like it's turning again. And now the RL10 crosses the dragon once more. Now we get our PSAR flip, and it's printed. And so I'll use that idea that I like the universal entry. So I'll just put that buy order right above, a little bit above that bar, the high, the print bar. And then kind of framing it out here. So if that's the entry, my stop is going to be down here at the RL10 swing low. And so now I'm just waiting to see if the entry triggers, and then we'll go from there. And it looks like it probably does on that bar, definitely on this bar, if we'd get an entry. So let me draw my little green dot in there. So enter here. Initial stop is down here, right, at this RL10 swing low. And then I want to show that jump stop of the no lose plus dinner for two, because it's really a central part of Ken's style of trading, particularly intraday, right, to get your risk out. So this is that distance. It's interesting how this was almost the same as an R10. You can see how accurate that can be, or at least a good approximator. So here's the distance from our entry to our initial stop, right, our execution risk. So I'm just going to put that up here and say if price gets above here, what I've already risked, if I've already have 1 hour in hand, I'm going to move my stop up and get my risk out. And so that's basically it. No more thinking needed, right? It's just following the rules of the RL10 flipping the PSAR for an exit, or else price is going to break through our initial stop. And then if it gets above here, I'm going to get my risk out. And that's it. We just watch it unfold. And what happens after, some kind of breakout, often a pullback, right? So nothing new there. Oh my God, I just gave it all away. Sorry. I've never done that before. Gee, this is embarrassing. Okay, anyway, so here we are. Pretend like you didn't see that. Erase that from your memory. So it's pulling back now, and that'll often usually happen, right? When you get the breakout, the entry the breakout that causes the entry, often then you'll get a pullback, right? And so it pulls back, and this one never then takes back off. We end up with the RL10, we get a whole bunch of down bars. The RL10 flips the PSAR here. And so the RL10 flipping the PSAR is a standard exit. And so then we'd be out here, right, with fractional loss. We didn't have to wait till it necessarily hit the initial stop. If you're using just that, and if price was crossing the PSAR, you're using that exit. Well, that would have been about the same place a little bit earlier, about a bar earlier here. So that's what kind of when it doesn't work, what it looks like. Any questions on that one? No questions. Okay, let me stop share so I don't want to give this next one away like I just did. We'll do one more though. I think it'll be helpful. 6. So this one was just from last week. I usually start out with the more recent ones and then go back in time, but back. Okay, share screen. Okay. So this is that same idea using the on-demand, but this one was from 2/26, just last week. This one we'll do an EWW, 3-minute charts again. So same kind of setup with we're on this right side, this blue vertical line, that would be the start of when we enter the market. In this case, it's also the start of the session. And I have my little handy dandy R10. And the PSAR actually started to flip yesterday from here. So if this keeps to go, if it gaps up, that it'll flip the other way. But if it keeps going down, I'll just use this, the continuation from last session for my GC3. And that's pretty much exactly what it does. This one doesn't really have any gap, right? It just continues from yesterday. So I just use that last PSAR to flip this one here. So this is where I'm hanging then my R10s. I'm basing the GC3 setup on that last PSAR flip from here. So now I'm going to start looking for, if this goes down, the RL10 goes down below these 3 R10s. And you can see it's already harsh winter in the MACD right from the beginning. So just stalking for that right now, that GC3 setup. All right, looks like we got it. That looks like an unambiguous move down to me. So all is well. And now we're just waiting for that. That turn is going to be the first thing. And you can see right there, right? You have this doji bar here, and then this next big up bar. That's enough to then get a nice sharp turn in the RL10. So that's kind of the first alert. Price bars are crossing the PSAR. The RL10 is starting to bravely cross the dragon, as it does here. So now we're just waiting for that PSAR flip. So this is a good example of those ones where that third PSAR you get in a little bit earlier, right? But no worries. We get this big bar, and that's certainly enough to flip the PSAR. So now we can frame this bad boy out. I'll do this entry right here. That universal entry right above the high of the bar where the PSAR flips. And then the initial stop would be down here. RL10 swing low. And now just waiting for our entry. We'll use those same rules. So that certainly looks like an entry to me. We would get here. Let me draw my little dot here, my little circle. All right, so we're in there. Initial stop is down here. Let me just copy one of these boxes to draw my execution risk. So here's that distance from my entry to my initial stop. Right here's my risk, my execution risk. And the same idea here. I'm just going to put that up here and say, if price gets above what I've risked, then that no lose close dinner for 2 just means jumping that stop up right above my entry point, getting my risk up. Other than that, wait for this initial stop to be breached or that RL10 to flip the PSAR like the last one. That's it. No thinking aloud. And as usual, after you get the breakout, some kind of pullback. But this one does keep going. Get a nice up bar. Some other nice up bars. Okay, so that bar would get your attention, right? So this is price has gone all the way up here, right? So if this came, and this is like the reason behind the jump stop, right? If this is like 1.5 hour in hand. If this came all the way back into a 1 hour loss, that hurts your feelings, right? So we don't want that. So we're gonna move our stop up and just say, okay, well, now my risk is out. Nothing bad can happen now, and I'll even get small profit. So that's good. So now that our risk is out, we're just waiting for that RL10 to flip the PSAR. So we'll stay in the move. And we get a little consolidation. This one works pretty well. We get bar that looks a little troublesome there. And now the RL, after these 3 closes down, you can see the RL10 is starting to turn down, which does coincide with the MACD showing momentum is lagging or waning. And then here, the RL10 flips the PSAR, so that can be just a standard exit there, out of the trade. And yeah, that's what that can look like. So captured a pretty good amount of the channel. Are there any questions on that one?
So when you move your stop up into the R10 risk box, you're just putting it above your entry price?
Yeah, I don't have a specific. I mean, I think it seems like typically most people, what Ken does is like 0.2, 0.25. I just eyeball it, but that's kind of how I trade. Like you could always calculate the distance here. Like this is about 12. Let's say it's 20 cents, then you could say if it moves 4 cents, or 5 cents, or I'll move it up, I mean, to 4 or 5 cents.
And also, what is the definition of the universal entry?
Oh, let me get rid of some of this stuff on the chart I can show. It's basically just a new high. So let me zoom in here. So let's say we're looking at, since this is the bar where the PSAR flip prints, right?
Yes.
So, and the high is right here. It closed at the high.
Mhm.
That's a Morobutsu candle and Japanese candlestick, I think. So there is that. So basically, we're just the universal entry is saying I'm going to wait for it to break out above the high of that bar.
Okay.
That's all it is. Yeah.
Okay. Thank you.
Sure. Yeah, it's just one of those examples of in technical analysis, like using additional confirmation. That's same idea with the PSAR flip print and then a universal entry, right? You get just a little bit more confirmation, both in time and distance. Any other questions on that one? Okay. Let me stop share. We'll get back to the scheduled program here. Put back up the PowerPoint. Let's see. I think that's it. Yeah. Okay. Oh yeah, so here's just some recent setups, and this is like, this would be the argument for why the universal entry can be nice, right? Sometimes when you get here, now this is in DIA, I had to move up, and then down here, after the PSAR flip here, we hang that R10, and you could see it was a GC3 setup, barely, but it was. And then this happens enough that this is why I use the universal entry, where it goes up, and there's enough of a price retracement to flip the PSAR, and then it never makes a new high. It's almost like the PSAR is, and this flip kind of like calls the pullback. I don't know how else to explain it, but that's to me why it happens enough that I'd rather just wait for and pay that little bit of insurance for like another tick or two, rather than just getting in, because then what can happen is then it fails right away. And so this was, I guess, all of last week was a good example of why the collapsing dragon is so nice, right? That you have, it's a nice kind of psychological trick, because it's like, here's that critical state after the move down. And so the SSC says, well, I'm going to play for, it was just here a few minutes ago. It's not crazy for it to get back there, but really the move I want is for it to fail so that I can be into this, which is often the second one down is at least as big, if not larger than the first one. So a lot going on there, right? Each chart is worth 1,000 words. I'm not going to say that many. This one was in pound dollar for those looking at the Forex charts, and there was the same idea here. For some reason, the R10 doesn't work as good. I don't know if it's because it's a 24-hour market, but I would say, we could, of course, always use this harsh winter indicator. And it was actually the same idea. This was a really nice sell-off, and then flip the PSAR. You never get the universal entry, and then you'd be in, on the next legs down. So kind of similar ideas there in the pound dollar.